So can you hear me now? Are we good now? We should be good now. Uh, Good evening. Good evening. Okay. We good. Uh, Sorry, who is Habib? Is it Rakib or something? Oh. All right, now okay. So let's just wait for the others to come in so we can talk about this thing. So I'll just speak on the dealing range and stuff. What exactly are you struggling with this in Rakib? Can you just tell me so I would speak on it before that gets here. The range. Okay, the dealing range, right? Okay, let me quickly explain the dealing range to you before others get here. So when you want to identify a dealing range is simply means okay. Let me use this let me use this right now to tell you what daily range is. So a daily range is basically an area where you are looking to take a trade from. So if you should look at this high from this high right here, from this high right here, this pair is bearish. So from this high right here to this low, what are you looking for? Okay, let's do this. Let's do this. Let's do this. This thing, Tajiri and the others, if you guys are here, let me know so that we can this thing, we can let me quickly explain this thing to Rocky. So, Rocky, like I was saying, if you want to identify a daily range is just an area that you are anticipating to take this in, to take a trade from. From example, look at from this high right here to this low right here. This high to this low, the market has moved, creating a break of structure here, we broke another structure here. So from this high to this low, this is my daily range. Because this market is bearish, I am looking to take a sell from this high to this low. I don't want this market to break this high. If this market should break this high, then my bias has changed. Even this buy that I'm buying now, I am buying for the market to come back into this premium area so I can sell from there. You get? So this is my daily range. Do you understand? So you are good with the daily range, right? Tejiri and Dave, are you guys here? If you guys are here, let me know so we can continue from where we start. Rocky, do you understand? Dave, like I didn't say, I was just explaining something to him. We'll start from this thing. Don't worry, just till we'll start. Let the other person join so we can understand what I'm saying exactly. So Rocky, this is your daily range. Let's say this break of structure now. We have this single movement that caused the break of structure. From this high right here to this low, this is your daily range because when the market comes back, you are looking for the market to come back into this area. You are looking for the market to come back into this area, either this point of interest or a fair value gap here, so that you can buy. You get? In this scenario, you are looking to buy in low only, and this is where you are looking to buy from. So that is your daily range. You are looking to buy from here this range right here, this is where you are looking to buy from, and that is your daily range. If the market should break below this place, then your bias is strong. You are not buying again. You wait for another setup. But as long as you want to buy, this is the area that you're anticipating that price will give you an entry from. So that is the daily range, an area where you are anticipating that price would give you an entry from. That is what a daily range is. And look at this, even this double break of structure pattern, this here like this, from this low to this high, that is your daily range. That is where you are looking for price to come back into, so that you can be a buyer inside. For example, now is either price come here and give you an entry, or it comes here and give you an entry so that it can go. Regardless of where it gives you an entry, from this high right here to this low, that is the daily range that you are looking to buy or sell from. Do you get? Which one is Nawa? You don't understand. Hmm? Okay, good, good. The person that said Nawa, you don't understand. If you don't understand, talk. Oh. You don't understand. So you don't understand what a daily range is. So let me explain it back. A daily range is an area where you are looking to take your entry from. Basically, you know that if you have a single break of structure, the market is indicating that the market is going up. But you are not going to be entry from here. You are looking at the market to retrace into this area, like this, from this low right here to this high. That is where you are looking for the market to retrace into, so that you can enter your position. You get? So that is the daily range that you are looking for. That range, the market must not move like more than that range. It must not break that range from this low to this high. That is your daily range. You get? From this low like this to this high. That is the range that you are looking to deal from. Like that's the way, the range that you are looking to sell from. Do you understand? Sell or buy. If you want to buy this market now, you are not entering here. You are waiting for price to come down to this point of interest so that you can buy. So from here to here, that is your daily range. And the same here too on the double break of structure. From here to here, that is also your daily range. You are not looking, you are looking to take a position inside this range right here. So that's what the daily range is. You comprehend? Do you understand? It's no, this is not about okay. Do you understand? I need you to understand before we move. Okay, okay. So we are still waiting for Tejiri, because even Daniel self never understand this daily range, and they are nowhere to be seen now. So do you understand the single and double leg break of structure? You understand the concept of the break of structure, right? Like the move, the single move and the double move. Like, can you identify it on the chart? I'm still going to identify it for you on the chart for you guys, but do you understand? Okay, good. Rakib, you go understand now. This is not your listen. You understand what break of structure is now. So wasted Jerry. Yeah, we'll move on now. Uh, so let's just wait 2 more minutes for Tejiri. If she's not here in the next 2 minutes, we'll move on to another thing and speak about another thing. She can come back and come and watch the video later. Okay, so you are here, and do you understand what I'm saying, or you need me to explain again? Are you here? If you are not here, we are going to move on now. Sorry, guys, for this thing for wait for here. Okay, so let's move on. She's going to she comes, she'll meet us halfway. So you guys understand this concept before I move on here. You understand the concept that I'm talking about, right? No, 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 no. The price range is like where your point of interest is. The place where a momentum comes in. Like this place right here. The market was coming down from this place right here, and this coming down right here is a retracement. You see this expansion that push price to break structure. That range is where you are looking for. Now this is now your new range. You get? This is now your new range. This is where you are looking for price to come and give you there's a term that we use in trading, like the market is ranging. If the market is ranging, that means the market is consolidating, like the market is not willing to move. You have something like this. So if you have something like this in the market, this shows that the market is ranging and is not willing to move high or to move low. So this is a ranging market. You get? But when we talk about a dealing range, like a dealing, where dealing, now, you know what dealing is. like you are playing card now, like you are dealing something, like where you want to make a decision from. You get, you are, this is the range that you are looking to make a decision from. Okay, for example, now let me show you this. Let me show you guys this chart now. So look at this. Look at gold currently right now. You see from this high. If you look at gold now, you know that gold is bullish here, right? And this was the last. This so from this low, this is the last low. You get, this is the last low that broke this structure. So this is where the buying power starts from. So we are in an uptrend on gold, and this is where the buying power starts from. And this is the high of the trend. You get, so if the market is retracing back now, I am not expecting the market to break this low if the market is still bullish. I'm expecting it to retrace to at least here or here. I know that it will give me an entry around this place. You get, yeah, it will give me an entry between here, from here to here. This is where I'm looking for my entry from. If the market should break below here, then I'm wrong. I cannot be buying again because the market has broken structure. You get, so, do you understand? The market has broken structure. Now I'm looking to be a seller. So if I want to buy this market now, this is my daily range from this high to this low. This is now my daily range. This is where I'm looking for the market to retrace into. Maybe I use my fib. I'm waiting for the market to come inside this fair value gap or this other block. I don't want this price to break this low, because when you break this low, the bullish narrative has changed. Do you understand? Okay, good. So let's talk about point of interest. You get, so let's still use this. I'm coming. We're still going to use this chart. We're still going to use this chart. Let me zoom in here so that you guys can see it very well. So when we are looking at this chart, what are we saying? Like, what are you saying when you look at this chart? What is your first thought on this chart in particular? I need answers. I need answers. Okay. Okay. So since this market is bullish, you're right. Since this market is bullish, so look at here now. Look from here. This is a break of structure, right? This is another break of structure upward. This is another break of structure right here, right here. So how can you identify a point of interest here? This this right here, this break of structure, what was the last selling candle that led to this break of structure? See, this is the candle right here. This candle, this candle, this is the last selling candle that led to the break of structure. So that's your point of interest. You are expecting the market to retrace back into that place. You get, you're expecting the market to retrace back into that place. Am I still skipping? My network is good now. So this is the point of interest that led to this break of structure, right? You can see the market retraced back into that point of interest and broke another structure. When we broke another structure, what was the last selling candle that was inside area? We have this selling candle. You get, we have this other block right here. This other block right here. We had this other block right here that was responsible for breaking this structure. And as you can see, market came back and respected there. So that's the point of interest. That's like a support for the market. The market did not break that because it's still maintaining the bullish momentum. And look at this break of structure. What was the last bearish candle that caused the movement? So this scenario, this is a double break of structure type of scenario. So this is the low. We had this first one. See the pullback. You see, this is even like a triple break of structure scenario. So do you understand the point of interest? The point of interest. You understand the point of interest that I'm talking about? But my network is good now. I'm the it's the read frame is very good. The network kilowatt and everything is good. I'm using my direct. I'm not using my Wi-Fi. I'm using my direct phone network. Can you guys hear me now? Okay, okay. Can you guys hear me? Dave, can you hear me now? And are you guys understanding what I'm saying? And Tejuri, are you here? Okay. So Tejuri, we've spoken about the break of structure and everything where you are not here, but so do you understand it or you want me to quickly brief you on that? Okay, so let's sorry please let's take our back fast. So this is a single break of structure. We have a situation where the market just move and like it has an impulse move up, breaking the previous high or the previous low. This is a single break of structure, and this is the double leg break of structure. The market is an uptrend, is coming here, but it didn't go directly. It came back again and broke it. So this is a point of interest. A point of interest is simply an order block, the last selling candle. The point of interest can be on any place. It can be on the point, like price is factor when it comes to trading. The price will respect the 1 minute order block. It will respect the 5 minute order block. But when I'm picking my point of interest, I like to pick from the higher time frame, like the 1 hour, 30 minutes, so that like I have confidence in them more than the 5 minute and the 15 minutes. You get. So the point of interest is the last selling candle. Let's say we have this move coming down. The last selling candle here before buyers come in. So that is where, like, okay, look at it like this. Let's say sellers are in control here. Sellers are in control. They were selling, they were selling, they were selling, they were selling, they were selling. So this place that the selling stop where buyers come, and this place where buyers start buying, driving the price up, that is an area that is like an area of interest, because that was when buyers entered the market. You get. So that is what another block is. That's what you see as an order block. So the last bearish, if it's a bullish momentum, the last bearish candle before buyers come in. If it's a bearish, the last bullish candle before sellers come in. So that's what the point of interest is. And we'll talk about it. I will still we'll still identify it very well. So Teju, this is just a quick highlight for you, because we'll get on the chat and still talk about more about the same thing. Do you understand? Okay. So we are talking about three things today. We are talking about these legs of break of structure, point of interest, and the daily range. So let's say you are in an uptrend. This range right here, if you have a single move that broke structure, from your point of interest, from the lowest candle of your point of interest that you pick to the highest place the market got to before retracing, that is your daily range. That range is where you are looking to take an entry from in the market. You get. So this is where you are looking to take an entry from in the market. If this market is still a bullish market, the market should not break this low. The market should come and give you an entry around here or anywhere. The market should give you an entry here. You should be looking for your entry from here to here. If this market should break this low, then you are probably wrong on your analysis. You need to wait for another setup. Do you understand? Before we go on the chart. Okay, good. So now, as this is what we're doing on the chart. So looking at this chart now, looking at this chart now, we are going to break it down. We are going to identify our daily range and the point of interest. So looking at this chart right now, we have a break of structure here to the downside, to the upside. Oh, what's now? Okay, I have a break of structure. Yeah. We'll still talk about this in fib. I'm just like, it's not. I just want you to understand the concept before we get the fib is like is used for entries and everything. So we are not talking about entries now. Rocky, you know you are this thing. You're not a new this thing like that. So you understand. I think I've taught you how to use fib before now. Okay. Okay, so we'll talk about fib. This thing fib is not ready. So we just want to talk about three things: the legs of break of structure, point of interest, and daily range. That's what we are focusing on today. So now look at this. Yeah, so look at this. Look at this right now. We have this last selling candle. This other block, the market was bearish from here. So this last selling candle, this is our order block that was responsible for pushing price, breaking this structure right here. You see, we broke this structure, and this is our point of interest. If you want to find an entry now, this is now our daily range. This is now our daily range. From this high, when market broke structure, this is the highest it got before retracing. So while the market is retracing, this is our daily range from this low, from this order block to this high right here. This is our daily range. The market should not break below this low if we want to continue buying. You get, if the market should break below this low, then there's something wrong in the analysis. Maybe the market is not trying to buy again. So this range right here, from this high to this low, this is our daily range where we are looking to enter our position from. You get, the market has shown us that it is going up. It broke this structure. It broke and closed above. It has shown us the high that it is going up. Now we want to enter this market. Now we want to enter buys on this market. What are we going to do? We are going to be looking to take our trade from this range, this high to this low. That's where we are going to be looking to take our trade from. Do you guys understand? Do you understand? Before I continue, do you guys understand? Not really. What didn't you understand? The daily range or the point of interest? It's not daily range, it's dealing range, dealing range. So so this dealing range, this is how it works. You see, the low that was responsible for pushing the market to break structure, the low that was responsible for pushing the market to break structure, and the highest point the market got before retracing. You get, the highest point the market got before retracing, that is your daily range. You, if the market should come and break this low now, eh, this is your protected low. Because if the market should come and break this low, then the market is selling, is not buying. But we have a situation where the market break and close above this high. It shows that the market has shown us the hand that it wants to buy. Now, as traders, we are looking for opportunity to get inside the market, opportunity to buy this market. So, as a trader that is looking for an opportunity to buy this market, what do you have? You have your point of interest. That point of interest is the place where buyers enter the market from. So, you will now draw a line for you to be able to identify it easily. You will now draw a line from the low of this, from the low of this point of interest to the highest point the market got to before retracing. You get? So that is your daily range. You are not looking for the market to break that range. If the market should break that range, then you are not buying again. You get? I want to buy this market, but I am looking to buy this market between here and here, because if the market should break below here, I'm not interested in buying this market again. Do you understand? These things are things that I've mastered already. You get? So I don't need to think about it. Even when I come on it, when I look at the chart now, I already know what the chart is doing. I already like know what I'm looking for before the market even opens. So I don't look at things like this. I don't even mark out my order block or anything. When I look at the naked chart, I already see what I want to see. So I'm just like, but you have to start like this. You have to start like this before. Uh, when I started, this was where I was also looking for it like small, small like this. But you get to a point in the market where you've seen price action, you know price action, so you just looking at it, you already know you already know that this is my daily range, this is where this thing. So these things you're going to put it together. You're going to start slow. You're not going to rush it. You're going to start slow, 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 and it will click for you when you back test, forward test. You are going to be able to spot it easily. When you're back testing now, you will be marking out. You get? When you're backtesting, you'll be marking it one by one, one by one. By the time you backtest for like a month or this thing, you'll be able to just see everything easily. You don't need to. You get? So do you guys understand? Do you guys understand what the daily range is? Okay. So now, so this is the point of interest that was responsible for breaking, and you can see the market was coming down, and it did not break this point of interest, proving our analysis right that the market is buying. And right from this point of interest now, we had a move from here to here. So this is the highest point, and we broke structure here. Where is our point of interest? Our point of interest is here, and from here to here, this is our daily range. We are not looking, we are like, the market should not break this range if we want to buy. When we are looking for opportunities to buy, we will look at opportunity here, like, okay, oh, I see this, I see this, I see this. Okay, I'm not, this is my point of interest. The market should not break below here. So if I should see an entry here, like when I teach you guys entry models and everything, you will know what to look for and everything. But if I see an entry here, I'm going to take it. If I see an entry here, I'm going to take it. You get? So this is the range that I want to be trading from. Understood? Okay. So the same thing, the same thing here we have here, get same thing, the same thing. You can see that price is respecting the point of interest, which is the order block. Price is not breaking there. So we have this break of structure here, this break of structure. And where is our last? Was our last selling candle. You get, this was our last selling candle, and price respect there. When price came back, price respect there. And we have a triple break of structure leg here. You see, let me mark it out freshly so that you guys can see it. So this is the high that we are looking to break. So the market is inside this range right now, inside our daily range. The market is inside our daily range. Until we break this high, we've not had a break of structure. So we are waiting for the market to break this high. So what do? We wait. So inside this range right now, the market is creating small structure, but that's not the real break of structure because this is our high. We need to break this high before we have a confirmation that we've broken another high. You get? So the market came, was was moving inside, You can see this is the first leg, came back, second leg, came back, and third leg before it broke structure. So this is a triple break of structure pattern, triple break of structure pattern. See, we have this before breaking. But this right here, this, if you understand the concept of our dealing range, from here to here is our dealing range. So any price action that is happening here inside this range is not a break of structure because we want the market to come and break the top of the range, the top of the dealing range before. Yeah. It just consolidated before it broke this high. So if we have, for example, now let's say the way we broke structure here right now, we cannot pick this dealing range. We cannot pick this point of interest because it is still inside this dealing range. So this will still be the one that is respected. You get? And you can see market came back and respect that point of interest because we've not broken the overall structure, and it respect there, and you can see pow pow pow. Now that it broke here, then we can now mark a new dealing range. This dealing range has delivered what it is meant to deliver. Now we can now mark a new dealing range. So the market broke here now, then we can now mark a new dealing range from this low to this high. Now this is our new dealing range that we are looking for the market to come and continue the move. Do you understand? You guys understand? Can you guys hear me? Okay. So what are the three things that we've spoken about today? What are the three things that we discussed here today? Okay, so yeah, you guys are right. So you guys know what to do next. You're going to go into your chart. See the way I mark it out for you. You see the way I marked the point of interest. When you mark the point of interest, you are going to name it. You are going to name it the break of structure. You see the way I named it. You are going to name the break of structure, and you are going to highlight this thing. So first, what you're going to do is you're going to go on the chart, identify a daily range. Then after that, you identify the point of interest, and after that, you identify the legs of break of structure. I just need you guys to identify just two: the single leg break of structure and the double leg break of structure. This is the single. This this is a double leg break of structure. Let me zoom in for you guys. We have everything here inside this break, inside this thing, inside this frame. So this is a double leg break of structure. We're coming from here like this. You see this high came back before we broke structure. So this is a double leg break of structure. This is a double leg break of structure, and this is a single leg break of structure. You see, this is a single leg break of structure right here, and we pushed up, straight up, no nothing, nothing. Like you see from here, we just pushed up, and this is a single leg break of structure, and we have our triple leg break of structure. We came one, two, three. Shit. So this thing has hit my stop loss. Why the fuck is this December price action, man? Why the fuck did Bitcoin stop me? Like, and it's still going to go down. It's still going to go down. Look at this. I think I got a freaking. I closed this trade today, and I entered back because of this thing. But look at the week. It stopped me out, and it's waking. No wala now. Funny enough, Bitcoin is still going to go down. I'm predicting that Bitcoin is this is my overall prediction on Bitcoin. Uh, I'm looking for Bitcoin to come to 72,000. Yeah, 72,000. This is the area where I want Bitcoin to drop to before we start buying. So, do you guys understand the daily range, point of interest, and break of structure? Do we all understand that? Okay. So, do your assignments and get back to me so that we can continue. And yeah, nice having you guys till the next time we stream. If you guys finish your assignment tomorrow, we might stream tomorrow and talk about another thing. If you guys did not finish, like I tell you, it's your pace. If you guys are moving fast, I'll move fast with you. If you're not moving fast, right?